Now look at both of those charts. At exactly like whatever it is, 170 days after the halving, they both have this correction, the liquidity correction. It's all the same thing. This is the everything code. It's all driven by liquidity and the Bitcoin halvings and the patterns that emerge. So that correction, however long that takes, call it a month, 3 weeks, that correction ushers in phase 2 of the banana zone, which tends to be the violent propulsion of alts, the banana zone signature pattern. So are we overbought yet? Should we be worried? Should we be thinking, my God, what happens if it's over 100,000 and it tops here? Well, our core risk indicator is nowhere near overbought. We're still barely mid. So it's suggesting we've got a lot further to go. When we look at the log regression channel, this is my kind of chart of truth. The thing that I find is immensely helpful. Well, we're not even at the mean of the trend. So we're still below mean. Now, we're going to go to 1 or 2 standard deviations. In fact, it's never not gone to 2 standard deviations. 2 standard deviations, you're talking $500,000 plus Bitcoin. Now, maybe it doesn't. Maybe the law of diminishing returns kicks in and gets to 1 standard deviation. Well, that gets you to 250,000 or so. I'm not giving you projections. I'm giving you contextualization of what an exponential trend looks like. All to play for, so there's nothing to worry about. Cycle top finder. This has been a really good way of finding the cycle top. We are nowhere there. Absolutely nowhere near. So again, chances are we'll have a little pullback in January. First we'll hit year end, a little pullback in January, and we'll just keep ripping higher until we eventually hit the cycle top. But that's a long way from now and much later towards the very end of 2025 or even into 2026. We can't tell yet. We see how liquidity plays out, but that's where we are in the banana zone. So picture this. If we just followed what happened in 2017, the last time Trump got in, government came in, is we had this correction driven by liquidity. It would take us back down to, let's say, the gap on the chart, something like 80,000. I'm not sure that we get that because of beginning of the year flows from institutions and other players, but a correction is the most likely outcome. It's very unlikely for it to go in a straight line. And you're all going to go, what should I do? This looks terrifying. Oh my God. Again, please, it's fucking noise. Don't fuck this up. It says expect 30% pullbacks. So please do not start thinking, how do I hedge this? Do I top out? Do I sell mine up and buy them lower? What you'll do is you will lose out and you will miss the rally because you've overcomplicated a simple trade. The simple trade is do nothing. So please think about doing nothing. We also don't know if Bitcoin falls, whether alts take that pause and everybody focuses on altcoins and alts rip higher. So
Real Vision founder and CEO RaoulPal predicted the first part of the banana zone several months ago. He described it as a phase in the cryptocurrency market that typically occurs during periods of heightened global liquidity, leading to rapid and significant appreciation in crypto assets. Despite the intense criticisms when the rapid price gains didn't come as expected, Paul stuck to his guns and insisted that there is a strong correlation between global liquidity cycles, which have shown clear patterns since 2008, and changes in the financial markets, according to Powell's Everything Code framework. Global liquidity cycles drive macroeconomic conditions which determine market cycles, especially for secular markets like the crypto market. When we reach certain points of the global liquidity cycle, Powell believes it's nowhere but up for crypto asset prices because central banks are certain to provide the needed push for prices in the form of various quantitative easing exercises, such as interest rate cuts, stimulus packages, straight to the point money printing. In the past few weeks, we've seen Powell's video. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for the support and enjoy the video.
We don't know the structure of this. So again, don't do anything unless this is why we don't use leverage, right? So that's my view on this. In the end, this is the game. The game is the banana zone. Look where we are. We've just started the banana zone. We've had the boring zone. We all suffered that. We had a big boring zone this year, much like the 2012 boring zone. We've just started. Now look at the beginning of each one of these. There's this little wiggle, which is the correction that happens in January. Great. It means nothing on the chart. So the banana zone lies ahead. I've given you the playbook. You can, if you play it right, unfuck your future with a banana. Ride the banana zone with me. Follow the don't fuck this up rules. It's all to play for. So anyway, hopefully this is useful to you. I keep trying to simplify. I see the same questions come up and up and up and up and up again. Is the market going to top here? What do I do? Oh my God, when do I take lifestyle chips? How much SUI do I have? How much Solana? I can't help you with all of these things. I can just give you a general contextualization, and I hope I've done it here. The thing is, breathe a little bit. Go and touch some grass. Stop hyper-focusing on the 5-minute charts. Stop all the noise on Twitter. Just relax, ride the banana, and you'll unfuck your future. Anyway, kids, that's enough from me. In a little while, Jamie Coots, who is really one of the greatest crypto analysts in the world, we're very lucky to have him at Real Vision. He'll be sharing some of his latest research with you. Again, we want to blow your minds and show the quality of research. Now, Jamie's mainly in the pro-crypto tier. The pro-crypto tier is where the heavy thinking gets done in crypto. We also do it obviously in pro-macro from the global macro investor, but pro-crypto is really for crypto heads who are really into it. There's also RV crypto as well. Jamie, myself, others, we're all involved in that too. We're here for you to help you unfuck your future with a banana. See you around.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.
Actually just mirror global liquidity. When you get into the speculative blow-off season, it actually tends to decouple to the upside because these are exponential assets. But right now, we're still in the point where they're highly coupled. So in September, we showed this chart and said, the first leg of the banana zone is coming. Cut to today. I mean, that's fucking perfect. I mean, I didn't expect that to work as well as that. I mean, that is literally perfect. And that chart suggests that we go somewhere close to 110,000. Maybe we overshoot it, whatever it is, but into the end of the year before we correct. So this is the first phase of the banana zone. So how is it looking in markets themselves? Let's flip through some charts. Now, these were put together yesterday. We've moved around a bit, but SUI, which you know, A, the sponsor of this. B, as you know, I'm on the foundation of SUI, but as I've always said, I'm a mercenary with my capital. This has been one of our core recommendations in both Global Macro Investor and Pro Crypto, and it's been doing extraordinarily well. The short-term chart of this, breakout. Solana. Here's a daily chart of Solana. Solana had a big wedge pattern, big consolidation, broke out. We're re-wedging right now. We should break out again into year end to follow that liquidity pattern, banana zone. Ethereum, this is the weekly chart of Ethereum. The weekly chart of Ethereum hasn't yet broken out, but it's very close. So whether we break out this month, which is my hunch, and then maybe retest in the January pullback from liquidity, or we pull back here for a bit and then explode through afterwards. Either way, that chart, that wedge pattern, to me is one of the most powerful patterns in all of crypto and suggests we've got a very big move in Ethereum to come. The other thing that I look at is I look at the cross rates between various crypto to try and pick the strongest one. I've already shown that Solana is very strong and it's expected to keep going higher. But when I compare SUI against Solana, it's starting to break out from this inverse head and shoulders pattern, which suggests to me that I would switch more assets from Solana into SUI. That's not saying Solana is going to go down. In fact, I think Solana does extremely well, and you should be overweighted there because it is a second cycle, more proven protocol, while SUI is newer and riskier. But it looks like the alpha is going to come from the new token, the new performer of SUI. And we can hear Adani talking about this later today when Chris Bullock interviews him about SUI. To show another interesting chart that I quite like is is XRP has been super strong. But really, what we've seen is the upward trend of SUI outperformance. We hit the bottom of the trend channel, and we're likely to outperform XRP going forwards again in that ongoing relative outperformance. Again, that's not saying XRP goes down, but I'm just giving you the perspective of these cross rates so you understand the nuance of markets, because really a lot of people have too much assets spread across too many things. When you start comparing one asset to the other, you can actually narrow it down and concentrate your bets into bets that really matter. A lot of the time you think, oh, I want a bit of this and a bit of that and a bit of this because that's going up and that's going up and that's breaking out. You actually underperform by doing that. I've found that being more concentrated in my bets, using the don't fuck this up thesis, which is have, let's say, 80 or 90% in the main tokens. And those would be Solana, Bitcoin, Ethereum. Then you can have weightings in whatever you choose it to be, where you think you're going to find outperformance, including some memes, which should be a much smaller part of your portfolio because you're likely to get wrecked. You'll have fun doing so, but you're likely to get wrecked. Okay, next chart, XRP itself, fabulous pattern. Look at wedge after wedge after wedge after wedge. So we're just building another wedge now, ready for the next break higher. So that move is clearly not done. If you look at the weekly chart of XRP, it's a stunner. This massive 7-year wedge is broken. Who knows where this chart goes to? It's very powerful. But then go back to that chart of SUI versus XRP, and it's suggesting that SUI should even outperform this. So that's the perspective I have. Now, it's not always going to be 100% right, but that's how I look at it. Here's SUI Solana. So we've been consolidating the wedge. We had the huge outperformance, consolidation, breakout, retest the breakout zone. Next leg should be SUI's favor because of the long-term chart. And this is the weekly chart. And you saw the daily chart earlier with the inverse head and shoulders, stuff like that. So there's a lot of great charts that are lining up that say banana zone. In meme land, whiff, dog whiff hat, inverse head and shoulders, broke out, retest, next leg higher should come shortly. Jupiter. So Jupiter is it's kind of a leverage bet on SOL because it's a DEX on SOL. So more SOL activity, more Jupiter goes up. So it's broken out as well and looks very positive. These kind of wedge patterns that we see are immensely powerful. So this is beta to SOL. Another one that did a very similar pattern was MOG. It had exactly the same wedge and then it exploded higher, and it's been exploding higher since as it ended up getting listed on the major exchanges. So again, you can see these patterns. They're human behavior on a chart, and they don't all happen at the same time. This is the hard thing about the banana zone, is different things pop at different times, and you've always, trust me, always got the feeling you've got the wrong token. Then yours pumps, and then something else pumps, and you're like, do I chase this one? Have I got it wrong? Stick with your program. You'll probably get it right over time if you use the don't fuck this up thesis of asset allocation. So don't worry, FOMO is a natural part of this market. The real temptation is to chase every breakout. Don't do that because they roll over time, they repeat the same patterns, but they're not all 100% in the same phase. The other one that's an absolute stunner of a chart is Doge. Doge just keeps doing the same thing every cycle. It does consolidation, 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 explosion. Consolidation, 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 explosion. The explosion is always the banana zone, and Doge is the strongest characteristic of the banana zone. It's this massive meme that gets the world's attention. It has been going since 2013, and it has been unstoppable. And look at the breakout levels. Now, if we repeat anything like we did the last two banana zone periods, we've got a hell of a ride to come. So Doge is something that I keep a close focus on.